So, Canada's going electric, eh? The $174 billion plan. You know Canada, right? America's friendly northern neighbor. Famous for maple syrup, politeness, and now, apparently, a massive electric vehicle strategy. That's right, folks. Canada isn't just dipping its toes into the EV pool, they're doing a full-on cannonball. We're talking about a commitment, a serious, we're-all-in kind of move. They've decided the future is electric, and they want a big piece of that pie. It's a bold statement in a world rapidly shifting away from a long history of gasoline-powered transportation. This is not just about a few charging stations. This is a national mission. Canada is throwing down a whopping $174 billion for this electric dream. This is a strategic investment aimed at transforming their entire automotive industry and securing their spot in the green economy. It's a signal to the world that Canada is serious about electric vehicles, from mining the minerals to building the actual cars. They're aiming to be a powerhouse, not just a participant. Climate change is real, and transitioning to cleaner energy is no longer optional, it's essential for the planet. The global auto market is electrifying at a rapid pace, and if you're not in, you're out. This ambitious plan aims to cover the entire EV supply chain. Now, enter Honda. The Japanese auto giant, known for its reliable cars, decided Canada was the place to be for its North American EV ambitions. They announced plans for a massive EV production hub in Ontario. We're talking about a multi-billion-dollar project, a real game-changer. This wasn't just a small factory, it was envisioned as an entire ecosystem. The plan included a new electric vehicle assembly plant, a standalone battery manufacturing plant, and facilities for cathode active materials and separators. The scale of this Honda project was truly significant, signaling a major shift for the company and a huge win for Canada. Imagine the jobs this would create, thousands of them, both directly at the Honda plants and indirectly through suppliers and services. Ontario was buzzing with excitement, but then, like a sudden plot twist in a movie you thought you had figured out, Honda hit the brakes. They announced a postponement of this grand EV project in Ontario. The dream of this massive EV hub, at least for now, was put on hold. So, what was behind Honda's surprising pivot away from the immediate Ontario EV mega project? Well, it seems Honda started looking at the current market and thought, hold on a second, maybe we jumped the gun a little. The company announced a strategic shift, deciding to focus more on hybrid vehicles in the short to medium term. Hybrids, you know, those cars that are part electric, part gasoline, like a Centaur, but for transportation. Honda sees them as a more immediate bridge for consumers who aren't quite ready to go full electric just yet, but still want better fuel efficiency and lower emissions. A big factor influencing this decision appears to be the good old US tariffs, specifically those related to the Inflation Reduction Act, or IRA. This American policy offers juicy tax credits for EVs and batteries made in North America with locally sourced components. However, the specifics of these rules, and how they might apply to components or vehicles from a Canadian plant primarily serving the US market, can get complicated. There were concerns that the planned Ontario EV output might not fully qualify for these crucial US incentives, making them less competitive south of the border, which is a huge market for Honda. This shift to hybrids isn't Honda abandoning electrification altogether, not by a long shot. They still have long-term EV goals, but it's more of a tactical adjustment, a recalibration based on current market demand, regulatory landscapes, and perhaps a touch of caution. Building massive, dedicated EV plants is incredibly expensive. Honda seems to be playing a slightly longer game, building up its hybrid sales while the EV market and charging infrastructure continue to mature across North America. Canada's battery game still strong, still charging. Despite Honda's surprising delay, Canada isn't just packing up its electric dreams and going home. The country's national battery strategy is still very much in play, and it's a crucial part of that larger $174 billion EV vision. Canada understands that you can't be an EV leader if you're not also a battery leader. So they're pushing ahead with plans to build a complete domestic battery supply chain, from the mine all the way to the battery pack itself, aiming for self-sufficiency and global competitiveness. This strategy involves attracting massive investments in new battery manufacturing plants, or gigafactories, across the country. Companies like Stellantis, Volkswagen, and Northvolt have all announced major battery-related projects in Canada, drawn by the country's rich mineral resources, clean energy, skilled workforce, and government support. These projects are still moving forward, creating thousands of jobs and positioning Canada as a key player in the global battery race. The Canadian government is actively working to de-risk these massive investments. They are offering financial incentives, streamlining regulations, and investing in research and development for next-generation battery technologies. The goal is not just to assemble batteries, but to innovate and lead in battery chemistry, design, and recycling. So, while the Honda news was undoubtedly a setback, it hasn't derailed Canada's overall battery ambitions. The charge is still on, and Canada is determined to power the electric revolution, one battery at a time. Will Honda come back? And what's next for Canada's EV dreams? So, what about that massive Honda EV project in Ontario? Is it gone forever, like a forgotten New Year's resolution? Well, not necessarily. Behind the scenes, Canadian officials, both at the federal and provincial levels, haven't just shrugged their shoulders and moved on. They've been in active discussions with Honda. The lines of communication are very much open. They're trying to understand Honda's concerns fully and see if there's a way to address them, perhaps by tweaking incentive packages or clarifying how Canadian production can align with US trade rules like the IRA. The potential for the project's revival is still there, though it might look different or happen on a revised timeline. Honda hasn't canceled the project outright, they've postponed it. That's a key distinction. It suggests that the door isn't completely closed. Perhaps as the EV market matures further, or if some of the uncertainties around tariffs and supply chains get resolved, Honda might see a clearer path forward for its Ontario EV ambitions. Regardless of what happens with this specific Honda EV plant, Canada's broader position in the global EV market is still being forged. The country has significant strengths, abundant critical minerals, a highly skilled automotive workforce, a commitment to clean energy, and strong government backing. These are powerful assets in the race to electrify transportation. Ultimately, Canada's journey into the EV industry is a marathon, not a sprint. The road ahead might have a few unexpected turns, but the destination, a thriving Canadian EV ecosystem, remains firmly in sight.